Good day, everyone. The number of distribution days in the major averages has been sizable, yet the market remains tentative as to direction due to the formidable force known as QE, quantitative easing. Normally, pre-QE markets would be in a healthy downtrend by now, but the QE effects keeps the downtrend somewhat contained. Nevertheless, as we've cited a number of times, leading stocks get hit hard on days that the major averages are down even 0.5%, and certainly when they're down more than 1%. And that's why we're always advocating keeping your stops tight to keep your profits or to minimize your losses when such days occur. We know that the annual Jackson Hole meeting is concluding today, and the Fed, Yellen didn't say anything of note. Their minutes came out recently, so it wasn't expected that she would be saying anything surprising. As we know that they're going to be laying out their plan to shrink $4.5 trillion on their balance sheet when they meet in September. And meanwhile, the ECB, the Bank of Japan, Bank of England, etc., they're all purchasing assets at record levels. The ECB is at 60 billion euros a month, and interest rates continue to remain at historically low levels. The question is whether the ECB chair Draghi is going to actually start winding those purchases down sometime in 2018. The market's waiting for his testimony later today. I think that's at 3 p.m. Eastern. In terms of if it's just going to be more jawboning, because that's really what all these central banks have done so far. They just say, oh, well, we need to think about slowing our QE money printing programs, blah, blah, blah. They've been saying it for months, and nothing ever gets done. And I think that, that ultimately the U.S. Fed really has the control here, and the rest of them are puppets, and the U.S. certainly wants these other banks to continue to print. And so, because the U.S. market is obviously the main beneficiary to all this extra capital that is injected into the system. And you'll also notice that the major central banks are the majority shareholders in many large cap stocks in the U.S. and globally. So and this is unprecedented. We've never had a situation like this. So it expresses the extremes of where the markets are at right now. And as far as the individual stocks, we've got to play, a strong defense in these environments, because all it takes is one day wonders for the market to unravel, and we've seen that happen a few times this year. And in between those one-day unravelings, the market tends to have these little pushing on a string baby stepping patterns higher. And it's no surprise that volatility has pressed to all-time lows. I mean, it's pretty much been near or at all-time lows all year. Started in January with the VIX basically around 11 to 12, which if you look at a long-term monthly chart on that, but that's pretty much close to, that range is pretty much close to all-time lows as ranges go. But the market kept on higher during that period, and then in May, that average of 11 to 12 then reduced to 10 to 11. And then with occasional, I think it was in July that the VIX hit an all-time low of 8.84. So these are unusual environments, but they offer opportunities. The UVXY certainly is something that in prior years, when you had one day of sudden market weakness or sharp market weakness, it would usually be followed. I shouldn't say usually. I would say more than half the time you had opportunity for a huge gain, because that weakness would persist into the next day or the next few days. So if you bought a UVXY as in on a VIX spike like that on the second day, you would more than half the time make double-digit returns. And meanwhile, on the 45% of the time it didn't work, your losses would be contained to single digits. So your risk reward was quite strong. Now this year it hasn't worked because the shape of the market's changed, and as we always advocate, be ready for changes This market has been at near all-time volatility lows since April, May, and meanwhile you get these one-hit wonders. So you can see on the VIX that you get these spikes, one-day spikes, where the market drops off for one day sharply on volume and then recovers slowly, and this pattern seems to be repeating. And so waiting for the second day of market weakness does not work in this market environment. You gotta be on it the first day. And the 620 rule, the 620 stretch and cross, MACD stretch and cross, is a viable weapon to be using in this kind of environment. So at any rate, I wanted to talk about some Chinese stocks, because we've had a number of them on the list, and we always have said, don't play earnings roulette. And we've seen that while some of these have done well, a number of them have not on earnings. I mean, you got Bizun, which is one of our favorites. That was a winner for us. We put that on months ago, and then it had disappointing earnings. And look what it's doing now. You've got contrast that with BABA, which is can do no wrong. It tends to remain tight. Definitely obeys the 50-day moving average, and it's not going to be the fastest stock, but it's quite consistent. And with a market cap of 436 billion, I don't expect this thing to be doubling. However, or I should say doubling anytime soon. I think it will double in time because it is the market leader in this space. It's the Amazon of China. And it's got very good growth patterns going on with earnings and sales. Actually, they're both accelerating. So, but what I mean is, it's not going to be one of these smaller, thin names that can double in a matter of 2 or 3 months. Not in this market so much, but you know what I mean. This BABA is more going to be a slow and steady mover, I think, and it's still on our list. And on that earnings, the earnings, last couple earnings reports, it's gapped higher. Meanwhile, you got Momo. This was on our list once upon a time, and then that, of course, had an earnings disruption recently. JD was on our list as well, but that one just couldn't make it, and just had this nasty downtrend, broke through the 50-day. What else we got? Here's an interesting one. At Home, they're in competition, I believe, with BITA. They're both Chinese automotive stocks that bring buyers and sellers together. And ATHM has been one of the champs in this. BITA is very choppy, but it also seems to be trying to move higher, albeit in a sloppy manner. WB, I believe that's the Facebook of China, and that one also has been quite strong. So I bring up these names because it's worth having a Chinese watch list per se of the leading names. There's about let's see, 3, 6. I got about 15 on my list, and so they serve as kind of a barometer for how Chinese stocks are doing, but also obviously the general market, because when the market's in even a weak uptrend, these names some of the names anyway, tend to perform, which is why they've been on our list this year from time to time. So they're worth keeping an eye on.
I think this group is topping myself, and I think the cracks that you've seen already in a variety of names, from Momo to Baozun to JD to NetEase, is going to start spreading. And if I owned any of these, Weibo, Sina, Weibo, BABA, I would either be keeping a very tight stop somewhere along one of the nearby moving averages, or I would be selling some into strength. You don't want to be waiting until, like Baozun. I think, didn't we mention in the focus list notes, sorry to interrupt, Dr. K, but that if it didn't hold the 20-day exponential moving average, you got to be gone, and you had a chance to dump it. Pardon me?
Absolutely. Actually, absolutely. I think we mentioned it twice. And it was, both times it was to sell this thing if it breaks the 20, or rather, we didn't say specifically like that. We said use the 20-day as your selling guide. Now, we reiterated to sell at the 20-day on a Market Lab report prior to the market open, and that was the day it gapped down. I think I mentioned that it was gapping down to its 20-day line, and that obviously is your sell signal. You don't need to really see much else. You know, when a stock gaps down, you know, what do we always say? Just sell it, because you don't. It's playing roulette with where the stock's going to go when it gaps down. It could go up or down. But like with earnings roulette, you know, if your odds are 50-50, then you might as well go to Vegas. So with this thing, you know, you obviously want to be selling, and then look what happened. I mean, it was off 24% that day. So, you know, selling at the open was your godsend, and then I can't tell you that's saved me on some names a couple times. You know, where you know you get a gap down, and you just got to get out of it. You know, and meanwhile it could drop, you know, several percent or more during the rest of the trading day. But yeah, these names, it's as a barometer. You'll notice that, and also I didn't bring up EDU. That's another one. They're not a lot of these names are not acting well. They're missing earnings, or they're disappointing. They're issuing disappointing earnings reports. So that's a red flag right there. And the number of names like Baba, how many are there that are actually doing well? Well, there's Baba. There's At Home. There's
You mean Auto Home?
Auto Home, yeah, not the original Auto Home.
I did that last week.
From the 1990s. Yeah, so you got these, the majority of these Chinese names are faltering, so that's kind of a flag, you know, that you should be aware of and keep your stops tight on things like, you know, Baba. Well, Baba's not doing any wrong, so keep your stops reasonable relative to the chart, you know. And what else? There's YY. Yeah, that one gapped down on earnings too. So how many of these gapped down on earnings? I think more like 7 of these things.
Yeah, and several of them are shorts, as I see it.
It's like half the group gapped down on earnings. So that's a big clue.
Let me go through some setups, Dr. K.
Sure.
Instead of talking about general things. If you look at JD, what you have here is you had a breakout out of a late stage base. It's failed. Once it broke the 20-day line, as I wrote in the last short selling book, now you're in failure land. And as soon as it broke through a few days ago, I guess it was a couple of weeks ago, that was your failure point. You get a rally back up into the 50-day and the 10-day and the 20-day exponential, and you build. That was a short sale point. You actually had it there day before yesterday, and yesterday again, I believe it was also up in the morning. So I've been playing this one on the short side. I'm actually out of it right now. Go ahead.
Also notice that your volume on the bounce is diminishing.
Wedging rally. Yeah, it's almost textbook, you know, and very little in this market is textbook, you know. Now let's look at if you look at these other ones. Okay, let's look at Momo. This is another late stage failure. You have a base here, and it was sort of a cup with handle, but we could already see, I was talking about this last week, that on balance throughout this area here, the upside volume was much lighter than the downside volume. So it was already suspect as far as I was concerned. And so you get the gap down below the 50-day line. If you see that, you can try and short it there using the 50-day line as your stop. If you're really nimble and you like to live live a life of danger, you could short it. But I saw this thing in the morning. It sat there like it opened up like 40 and change, and I remember just looking at it and trying to decide if I want to short it, and by the time I even started thinking about it, it broke another 2 points to the downside. So you had to be quick on it. Now it's undercutting these lows down here. What the heck? These lows down in here, so it could be subject to a rally. I'd like to short into the 50-day line, but that's a late stage failure. And that's pretty textbook. So are you guys, can everybody hear us okay? I don't see any questions, and I'm just wondering if you're all just agape at our brilliance this morning. But there's no real questions, so I'm surprised.
I wanted to mention actually that you'll notice that if you look at the overall cup and handle, that handle is very defective. It's when a pattern starts to break up like that. Rather break down, break up, you know, and it gets sloppy, that's warning sign. I mean, yeah, it had a little gap up on the 14th of August, but on low volume, the pattern's getting wide and loose. and that is a telltale red flag.
And that puppy died, and it's dead. So if you're not out of that and you still own it, thinking that you're going to hold it for a long-term move, I think you're an idiot. Let's move along to Bausen. I don't know if anybody was paying attention, but yesterday, well, not yesterday, but Tuesday, it busted the 50-day line, and then you had a cheesy wedging rally up above the line that reversed, and it becomes a short again. It trades 3 million shares a day, so it's liquid enough to short if you can get a bar on it. I wasn't able to get a bar on it, but JD has been good enough. And if we look at some other names, forget about so the one thing I'd be watching for are failures in some of these. WB, Cena, whatever's holding up. I mean, we've seen Netties already blow, and that was also, if we go back here, here's a base, and it tried to, it's sort of a ugly cup with handle. It broke out once, twice, 3 times up here, and whoops. And then that finally and eventually led to the final breakout. You notice how to breakdown rather. You notice how it took so long to do that, and that's not unusual because you can often see late-stage failed bases take some time chopping around. And why does that happen? Very simply because of the market. So, and I'd also want to point out that I believe we're in a robo market. It's mainly controlled by the algos, and they can make it do anything they want as long as they've got plenty of QE out there, free money in other words, to throw around. So you've got the carry trade in the futures overnight. I think they can just pile into the futures, push them whichever way they want to. But meanwhile, I think the market is probably under very subtle distribution, and maybe not so subtle because you can see names like Netflix starting to break the 50-day today. As we wrote in this morning's focus list notes, a breach of the 50-day line brings this into play as a short sale. Tesla, same situation, but you could have used a 10-day line. Notice how it ran into resistance at the 10-day line right here this morning, and that's what I was watching for. But you want to know what sucks is that I couldn't borrow the stock this morning. I was all ready to hit it again. I've been able to borrow it just fine, catch this move and this move. And this little wiggle in here before, and now all of a sudden I can't borrow it. I don't know what that means. That means it's probably going to blow to pieces. But anyways, but other stocks I'm looking at here, you got Google, and you're going to notice most of these are short sales. This is a short sale at the 20-day exponential moving average using that, or you can use a 10-day as your stop. Notice that it too is a late stage double bottom breakout failure. But on the weekly chart, it's a very narrow double bottom, which is suspect anyway. So that's now in a bear flag, and I don't know if this, it's either going to be a Louis or a bear flag, and if it turns out breaking to the downside, which is what I think you're going to see, then it's going to be a bear flag. So for now, I think this is probably a short if the general market continues lower, and you use a 20-day line as your stop. Now remember, you got to be ready for anything. So if you're shorting this market, you got to keep your stops tight. The other thing is you have to be persistent in terms of just coming back after stocks time after time before they finally break. And I think CRM is another one to be watching as a possible late-stage breakout failure after earnings. If this starts to, in fact, it's already reversing. So I already hit this on the 620. You can see up here you had the MACD cross up here earlier in the day at around, I don't know, let's see, what is that, 94.79, somewhere around there, and now it's rolling over. So another one that was like that, I'm still short it, is Splunk, which has reversed earlier in the day. You had a 620 sell around 66.40, so now it's trading 65.59. I'm actually short that one. I've been working it. Now we're trying to bounce off the lows, but I think this has a shot at going a lot lower. It's just going to reverse. That's what I'm playing for. So my entry now, I got a point on it. My entry is my stop. So I'll get out of here making no money or a lot of money, one way or the other. So, and I also may have to come back after it a couple of times. But anyways, that looks suspicious. They're up on earnings. They made 8 cents. They're only selling at 127 times estimates, so it's a cheap stock, and if the market starts to come down, everyone will just start buying it as a value stock. Right? Wrong. High PE stocks in a bear market, the PEs compress brutally. So that's what happened after 2000 and after 2008. when we went into the last real bear markets that we've had, and that's what you'll see happen. So these become vulnerable, and I think the whole group, you've got data as another one, is kind of up there. It's reversing off the highs. I'd watch this for possible failure. So there's a lot of names I'm also watching at, not only that already are late stage fail bases that have rallied, such as say Light. Yesterday this was about as juicy as they get. I caught the break. You guys might remember this. I talked about it maybe 2 or 3 weeks ago. I caught this break short when it rallied after earnings, and now it's gotten close to the 50-day, I'm sorry, the 200-day, but it basically found support near this low, which surprised me. I was looking for it to undercut, but at that point I had covered just because that's a big profit. Yesterday they punch it right into the 50-day moving average, and I shorted it there, caught the move down to the 20-day exponential here. Now I'm kind of waiting. I've covered it, took my profit. I'm waiting to see what happens from here. So, and I stay very active on the short side. Why? Because we're in a robo market, and they can turn things on you very quickly. And I'll have these periods where I'll catch a nice move, I'll make a bunch of money fast, and then I'll spend the next several days trying to re-short or go after some other things short. But meanwhile, the robo market will just turn and rally for no reason or for some stupid reason, like I guess they were talking about tax reform will get done before Christmas, on Christmas Eve. Big deal. But then finally I'll get another break, and that's what I'm looking for right now. I'm set up. I'm only about 2% off my highs for the year right now on the pullback, and I'm looking for another entry that's going to make me another 10-15% hopefully on the upside. So we'll see what happens. But this is a late stage failed base. This was the initial failure signal around the 20-day moving average, and you can go back and read the book Short Selling with the O'Neill Disciples, and now you have the breakdown, the rally to the 50-day, and this may go on for a little period of time, or it may just break to the downside. That will depend on what the market does, okay? So let's see, other ones. Well, we know that Applied Opto is a short, and I've been waiting for it to rally up to the 50-day to short it, but it doesn't seem to want to do it. It's just staying in a bear flag, so maybe it just breaks lower, but I don't think it's in a position where I'd want to be shorting it. I'd rather go after something else. So I'm really watching these clouds right now. Now is another one. This one I shorted earlier. I just covered it just under 111 down here, and because I got about $1.50 in it off the peak, and I just want to see what happens. I'll go in real heavy when I think things are turning, and then as these stocks start to come in, like the JD, like the Now, I even shorted, believe it or not, Take Two. Which is another group I'm following as potential failure situations if I see it, and of course that would make them short sale candidates. Remember that your primary short sale targets are going to come right off your prior long watch list. So the things that were the leaders before, and we see that with the Tesla breaking down, with Amazon breaking down, with Chinese names breaking down, that's what you're seeing. So those become your short sale targets right off the bat. So I notice the NASDAQ is down just a pinch. They had the market up. What did they have the Dow up nearly 120 points this morning? Anyways, now it's what, up 67? That's all BS. It's not real. My guess is we're heading lower. I don't know. What are the indexes doing? I see. Notice how the NASDAQ is doing pirouettes, or it's doing the somersault on the uneven bars like a gymnast around the 50-day moving average, and it doesn't know where it wants to go yet. So, but this could just turn out to be a short zone on a bounce, and it's going to roll over. I think they have enough suckers out there that they can sell stock to and keep it at the same time keep it elevated. So, that's what it looks like to me. Somebody says, a lot of these shorts you're discussing have that big volume down day that you discuss in your book. Yeah, I guess so. Some of them have big volume down days and they keep rallying, like, you've had here on Take Two, and it's continued higher. But we'll see what happens. But these are the sorts of things I got my eyeball on right now as potentially new short sale targets. But right now I'm working on Now, CRM, Workday, Splunk, and Data as a group that may become a nascent short sale target very quickly here. So we'll see what happens, But you got to play it tight and play it disciplined and actively. So could you see AMAT as a short? Somebody is asking. That's, if it's a late stage failed base, probably, yeah. Yeah, that's a situation that looks like a short using the 50-day line as your stop. And that's a late stage failed base, starting to look kind of like a weird head and shoulders. Another one I'm actually putting out, I got a little bit out right up here at like 90.32 on this bounce, mainly because you're coming up, the low here is 91.22, so I don't know, maybe it's going to rally and fill this gap before it rolls over. So I'm small in it right now, but I might get bigger if it starts to get hammered and roll back through the 50-day. But this is one to keep an eye on. There's some news that they're going to buy Toshiba for 1-point-something trillion dollars. I don't know. Doesn't really thrill me. But you're seeing a lot of these. Like this morning, a lot of chip stocks are breaking. There's a Vago. There's a late-stage failed base. So, I mean, you look at these. What are they telling you? They're telling you that this market is weak under the hood. We're probably going lower. How the path that we take is going to be, I think, a function of the robo market, because like Dr. K was pointing out, we have huge amounts of QE out there. They've just been pouring money into this market. The central banks have, even though the Fed is supposedly done, but the BOJ and the ECB, they've been dumping money like nobody's business and at record rates. So we're getting close to the end, I think, at least in terms of seeing a bear market eventually start to, or at least a nice correction that's going to beat a bunch of morons up who just sit there. Anyways, let's see some of these others. Amazon, I was talking about, that's another late stage failed base, and it's acting like a bear flag. You had one rally, if you were alert to it, to the 20-day line just below the 50-day, and it rolled lower from there. Now it's trying to pull these undercut and rally moves along these lows, but it doesn't seem to be getting any traction. My guess is it rolls over and dies and goes lower. Just when people are telling you, remember all the way up, people were skeptical of Amazon, and then once it got up in here, I remember Stuart Varney over on Fox, and I like Stuart, he's a nice guy, but man, is he clueless. And he's talking about Amazon, how great it is, and blah, blah, blah. And some analyst right in here was talking about how everyone should have a relationship with Amazon. And my answer to that is, okay, I'll go with that. But the only relationship I'm having with Amazon, once it's had a late stage failed breakout and it's setting up as a short, is that I'm just going to continue doing what I do with Amazon, which is buy everything on the planet. So through them, and I love the fact that they do that. So now suppose I can go to our local Whole Foods market and pick up my stuff early. Thrilling. Let's see. You guys want to go through some more shorts? I don't see anything long. So I know we had some guy signed up for the webinars a couple of weeks ago, and then he quit because or canceled because he said all we discussed was short sales. Well, guess what? 2 weeks ago the market was topping, you moron. So, you know, we're not going to talk about a bunch of long names for you just because you decided you want to buy some stock at the end of one of the biggest bull markets in history, you know, like an idiot. So the subject matter is in sync with the market. If I saw a bifurcated market, which we had maybe 3-4 weeks ago, when we were first starting to see Amazon break down, yeah, I might talk about some longs, and I have. But, you know, right now I think the short side is really coming into focus. And fascinatingly enough, all these, you know, it's just all these leaders. Workday's, did I point out Workday? Here's another one. I mean, look at how it's in a late stage base. It's on the verge of failure. It's going to die. I'd almost give you a guarantee on that, but in this market, it's the robo market. Not everything is guaranteed. Only death and taxes. Anyways, I thought it was funny because I've been reading a lot of stuff about, and we have a good friend who owns some properties in D.C., Washington, D.C. area, and the value of real estate's been going nuts. And basically, I have another friend who works for the Department of Commerce. He's an engineer. He refers to himself as a career bureaucrat, and he's shameless about that, which, you know, I'm all for it. At least he's truth in advertising. But he also says that it's a boom town in D.C., and you have to wonder, why is D.C. a boom town? It's like the capital in, what was that? Hunger Games with Jennifer Lawrence, one of my favorite actresses, but I won't get into that too much here. But That's what it is. The capital is an area of affluence, and it's booming. And why? Because we had $10 trillion of additional debt taken on by Obama, and then before him, $5 trillion by Bush. And so that's why Washington is living high up the hog. And they're going to raise the debt ceiling again, so that the Donald can probably take us $20 trillion further in debt. I mean, you might as well double up on Obama, who doubled up on Bush, right? So you might as well do that, and maybe that will bring on the final collapse. Anyways, so
Yeah, like Washington represents the greatest disparity between the haves and have-nots because of this extremism going on with all the money printing that lines the pockets of.
The financialization of the American economy. So, and it benefits the bureaucrats and their minions and their supporters, like Silicon Valley, because Silicon Valley can companies like Tesla and whatnot can issue stock like mad and cash out. All these unicorns, they can all cash out because there's all this money flowing around and it needs to go somewhere. So anyways, but that's all blathering, so we'll get back to business here. I would watch ANET. I think this could be failure prone and maybe a little double top. It's been rallying to new highs on light volume, and it's been on our list and it's stayed there. But again, with any of these, we only have ANET, Appian, which has had a pocket pivot on Wednesday, but I wouldn't be holding it here. And let's see, BABA, which is continuing higher, but I think that's going to come in at least to the 20-day exponential, I think. What are the other ones on the? Oh, Take Two, which I was talking about. I shorted today and I covered it under 94. So I'll scalp a number of these. I'll come after them heavy, and then boom, boom. If I get a move to the downside, I'll cover. If I sit there too long, everything turns around on me and goes back to the upside. So I'm noticing Salesforce turning red. Now is going lower. I may end up reshorting that. We'll see. But, you know, what I'm looking at also, we just saw, I talked about Netflix breaking below the 50-day. And Google is a short, and Amazon is a short, and Facebook. Is Facebook a short? It may very well be turning into one, and it's failing at the 20-day exponential moving average. That may be a short right here. But I think another way to play it, if you don't want the individual headline risk, is to just buy the SQQQ, and I'm actually long that. I forget how much. Not a huge position. It's just 15,000 shares. So, but I mean that'll help, and that substitutes for not being short, say Google, Netflix, Tesla. I think that kind of covers the whole group. So, anyways, getting back to gamers. This one may be starting to fail, so I think you want to keep an eye on that. What's the other one? EA? Yeah, these may be starting to fail. So, you know, you've got late-stage situations that look like they could be panning out into short sales here. So I'd be, if I were long, I might be looking to just bail and take my profits because they've all done pretty well. But I think a lot of these are going to morph into short sale setups. UVXY, somebody's saying that UVXY crossed. Yeah, you had a nice cross here. Notice how you had a couple of false ones, boom, boom, but you're going to get out. If they fail, you're going to get out pretty quickly. I never lose more than 10 or 20 cents on these when I try them, but then usually you'll catch a nice move. You went from 30 on the cross here. Let's see, that would have been around 31.13, I guess, and you could have got a nice buck out of it real quickly. Now it may have to set up again. But, I mean, who knows what they're going to do with this market? They could do anything with it. It could close up. It could close down. You know, it depends which switch they're flipping on the algo machines. So, and that's basically what you're dealing with. Anyways, where was I? I'm actually not heavy short right now. I was earlier, and you had a nice breakdown. Dow is up 40, I guess, but now it seems to be trying to bounce. I'm just watching this because usually you'll get one move in the morning, and then you'll futz around for the rest of the day, and you may get another chance to short going into the last couple of hours, which we're getting close to at this point. Let's see, what else? NVIDIA, that may be one to watch. potential late stage breakout failure. Notice how we're getting the same situation. I don't know what you call this, a bizarro cup with handle, and I don't know why this keeps defaulting, but you got a bizarre cup with handle. It tries to break out here on no volume, and it fails. And then it rallies back up because, of course, everybody has to buy any and every pullback in NVIDIA because it's cheap and it's going to go up forever, right? After all, it is the next Cisco, isn't it? At least some people like to tell us that. But this is one that should be watched for failure. So I think, you know, things are in flux here, and you basically want to, if you're a long only type person, I think you want to set your stops in a reasonable position, the 10-day or the 20-day exponential moving average, okay? So know where your out points are if your own stock starts to break. Number two, if you're a short seller as well, then you want to look at all the stocks that were on your prior leader list, and I'll actually go back and use lists because I keep my lists and over time, and I have, you know, they're always changing, so I'll keep my leader lists from 6 months ago, and I'll look through that. And you want to look through all of these, especially your current one, say from the last month or two, and you want to start looking for late stage breakdowns that may turn into shortable situations. So that's why I'm watching a lot of these stocks like the NVIDIA, like the you know, the CRM, the Now, the Activision. I'm just going, anything that's holding up, I think, is a candidate for blowing up. So that's what you want to watch for. And one of the best breaks you'll get, example would be Light, is when you do get that late stage failed breakout, the first and best break you'll get will occur pretty shortly thereafter. Sometimes it doesn't at all, but the point is that you'll catch a nice move, and then it'll futz around a little bit, and the next time to come after it is when the market's rolling over again. So everything has to be shorted within the context of the general market for the most part. So anyways, no more brilliant questions, huh? I mean, look at some of these price line. Here's another one. These are some of these big cap leaders. I think Apple's a short, okay? I know everybody wants to buy it, but it looks like a short to me. Any questions about shorts? What are some of the other software? I'm sorry, Skyworks Solutions. That looks like a short. It's a late stage fail type of base. That's what it looks like on the weekly. But you can see it's sort of a funky cup with handle that looks like it's failing. That looks like a short. And we can go through this whole group. Name some other chips, Dr. K. Throw some chip names at me. Mu. That looks like another late stage failed base situation in short sale land. What about, you got AMD, that's one that people have loved. And that, look at that. That tried to break out up here. And that failed quickly, and it's basically been a short since then if you're onto it. But see, this is what I've been seeing for the last few weeks. And those of you who follow me on Twitter, you might notice I put up a train picture. I always put up a train picture when I think the train is approaching off in the distance and about to hit us. And that was on August 4th. And that was when I was starting to see a lot of patterns begin their breakdowns. Amazon was one of them. This looks like this was another one, but I don't know if I saw that at the time. But just flipping through charts, I'm seeing all these failures, and I'm thinking, either we're going to rotate somewhere else serious, or we've got some issues here. And as we see now, we've had some issues. The market has plenty of issues. CRUS, what's CRUS? Somebody's saying, holy shit, CRUS 2. LRCX. That's another one starting to look like it's failing. Facebook I talked about. What's that?
SMTC.
SN. What is that?
SMTC. Semtech.
SNPC?
T is in Tom. SM. Sam, Mary, Tom, Charlie.
Symantec?
Semtech. Semtech. SMTC.
Oh, I got you now. Okay. Yeah, there's another one. So, let's see. UV overhead crossover on MACD6. Okay, someone said. Could you see AMAT as a short? Wait, I already answered that. A lot of these shorts you're just getting blah, blah, blah. Okay, wait, where am I on the questions? Somebody's saying, can we talk about some of your strategies to keep your short gains? Well, read the book that I wrote. My strategies are simply to look for an intraday, and this is something we discussed. So let's say take two was one I shorted this morning. And basically I hit it, you had a MACD stretch up around 96, and boom, it broke. And you get the shorts, you get the the breakdown on the 620. So here's where the cross occurs. That's right about here. So I hit it right about there. Thing broke, went down, the MACD stretched, and it turned right here, cover. So, and yeah, that might have been no. So I was getting this wrong. I thought I was thinking 95 was a short, and I covered under 94, but no, I covered under 95, somewhere down in here on the breakdown. So that worked out pretty well. But that's, you can see that you get the MACD stretch and cross on an intraday basis. I will cover and then wait and see whether I can come after it again. So I may come after it again, but notice how now you got a 620 buy signal here. But notice how the MACD cross, and this is something that I noticed, you'll get a MACD cross early. And one of the reasons I like to buy on the MACD crosses and short on the MACD crosses is because by the time you get a sell signal, the thing is already down here, and the same thing here. So now you get a buy signal here, the thing's already up here versus down here was at the bottom. So I'm watching the MACD, and if the MACD's it has crossed and it's been going up for a while, now notice how it's starting to cross to the downside. That may be telling you that take two is going to roll over here. And I might even short it right here and just keep a very tight stop, say at 95. Just something arbitrary that based on how much I want to lose if I'm wrong, and hit it. But sometimes the MACD cross can tell you it's about to roll, and in this market that's worked a lot better than waiting for a full-on 620 signal, because once you get the moving averages cross, it's way after. In this case, this occurred not too long after, but still it's the price differential is too great versus from here to here and from here to here. So watch the MACDs. The MACDs, I think, can control risk as well, because if they do roll over, then you are out of them very quickly. So my stomach is grumbling here. It must be, yeah, it's 10:49, so I eat lunch at 11, mainly because I'm up at around 4:30. So I'm getting hungry. Let's see. Somebody's saying, okay, to expand on these questions, somebody's saying, I know you use MACD stretch or at the moving averages, but man, the reversal was fast. Yeah, sometimes they're fast. I was up nicely yesterday and gave it back. Well, that's true. And as you say, it's extremely frustrating, but it happens. So you just roll with it and you come back. You make sure you don't lose any money, or if you do, it's very little, and you come back to fight another day. But it's not easy. And this market, like I said, it's a robo-freaking market. So the market will do whatever the hell it wants, whenever it wants to do it. And it does. Surprise.
Well, also, on the stretch, if you get a serious stretch to the downside,
you can
sometimes use that as your profit-taking point. But it has to be quite exaggerated, and it works in the reverse too on the upside. We've seen that with UBXY when it tends to streak. Yeah. Sometimes you get this incredibly tall stretch, and that's it. In fact, that you could say that's your reversal point, and if you want to, just reverse out your position and buy XIV. But and exactly where your stop out's going to be in that situation. It would be kept very tight. So, and I've been studying these patterns, and I found that, the odds are in your favor, but you have to take everything in context to be able to call it right. So that's where the experience comes in.
Yes, it's my amazing chart eye that keeps me out of trouble. My incredible clairvoyance.
Don't forget my crystal ball.
Yes, and my crystal ball. I forgot about that. Now what about this one? Well, this is breaking off the peak, so I don't know if you're going to try and short it off the peak. I wouldn't necessarily do it. I would maybe have shorted it off the peak if you got a 620 sell signal, because that occurred early in the day, and it was pretty quick at around 30 bucks, and it's going lower. Can I short on 20D? You have to ask my opinion. It's way down. It's down 10% almost on the day. So, you know, I'm just going to say something. If you have to ask somebody whether you should short something and you're looking for some sort of mechanical yes or no signal that you can short on, then don't short. You need to study it and understand when you need to get in, and also not be driven by greed. You see something down or the market looks weak or whatever, and you decide that, oh, I got to get short a bunch of stuff here now, and I'm just going to start shorting, especially if Gil says it's okay to short. It's like, if I had shorted this up at the top, I'd be looking to cover at the 20-day and see if it doesn't bounce off and then roll over back through it. I wouldn't just say, oh, it's through the 20-day, I'm going to short it. Maybe it goes lower, maybe not, but that's not what you want to be doing. You want to be anticipating. And you want to be scoping out the patterns. That's why I'm watching some of these, you know, the nows and I actually just put take two out at 94.70. So, and basically for the reasons I'm talking about, you got a MACD stretch. I've already been playing this once on the downside, and now here we go on the. And just so you know, I did actually short it at the 20 period. I re-shorted it there just in case that served as resistance, but it went through very quickly, and I just covered it like 94.43, I think it was. And then now it's up here. I'll come after it again, and I'll do this with stocks all day long. So, but I'm watching a very finite group. I'm not trying to look at everything in the market, and I would suggest doing the same thing if you want to short. Focus on 5 to 10 names. And go through your list and look for potential late-stage breakdowns, and look for the ones that may be moving into position or just issued a signal somewhere or broke down through the 20-day, and now they're rallying back up into the 50-day. And focus on those. Every day I have a big list of leaders that are breaking down, and from there every night I go through that and produce my focus list for the day. So the stocks I'm going to focus on trading for any particular day. So I'll do that the night before, and that's what I'll just focus on, because the market's very fast. Things can become very random, and so you've got to be moving, and the less you have to watch, while at the same time having targets you can be profitable with, and that's long too. I'll always have some long ideas. It's much easier to deal with it. So I'm going to be pissed that I covered JD. It's now down $1.63. Light was another one. Let's see. But anyways, that is the essence of the short sale game right now. And if you're going to play it, that's what you want to be doing. So I don't really have too much else to say. I could go through a bunch of names, but it's all the same thing. Same sorts of patterns, and the ones that are already covered give you an idea of what you're looking for. So you want to go through your long watch list, at least maybe a month ago or so, 1 to 2 months ago, whatever your long watch lists are. And I would suggest when you have long watch lists and you change them around a little bit on a daily basis, you might take a name out and add a name. What I do is once a month, I'll just expunge that list and save it and have a new one that's generated from newer names that I put on during the month, so that I have old lists that I can refer to. So, and I keep those. If you look at my HDS Investor software, I'll go to my list, user groups. These are my lists, and you can see that I keep all these lists. This is my buy. Well, I'll take out the filter. No filter. This is my buy list from 10/10, 2016, and I got 4/28, 27. So you can see I have basically every month. And I can go back and look at those, and that's where I'll be able to pick up a lot of really good short sale ideas from things that are topping. So that's basically what you want to do. So shorting isn't easy. It's probably the most difficult thing you'll do. I've made the most money, the fastest shorting, except for the last couple of months of 1999, when I went from plus 32 to plus 1,001% in 2 months in my personal account. Something that'll probably never happen again. Maybe, I don't know, we'll see. But it's all on the short side. That's the fastest way I've made money, except for late 1999. But it's also the fastest way I've lost money. So the trick over the years has been to become a little bit more facile and nimble in understanding when to take profits, and also when to recognize that things are not going your way and get the hell out of the way. So anyways, have you ever shorted stock using 10 SMA? No. So Usually, though, I will short a stock that's extended if I see it rallying on lighter and lighter volume, and the volume's just really low, and I'll just come after it. So that's one thing I will do. Anyways, that's all we got, you guys. I want to get back to trading because this could be an interesting final 2 hours here. And if you're on the right side, could be profitable. But like I said, if you don't want to watch this SQQQ, I do have a position in that. Because that may be headed higher, and that's an easy way to play the short side of all the big stock NASDAQ names that are starting to break down. Amazon, Priceline, Google, Netflix is just barely starting to break down, perhaps. Tesla, possibly Nvidia, possibly Microsoft, Apple, Cisco, Baidu, Qualcomm. I mean, so that's an easy way to play it if you want to try and do it that way. So anyways, that's all we've got, you guys. Thanks for showing up. Have a great weekend, and good luck. We'll catch you next week.
So long, everyone.